So if you're looking to buy a home, you're going to hear a lot about FHA loans. So let's start with what an FHA loan is. So an FHA loan, a lot of people say, Hesh, I want first-time home buyer loan, FHA. Okay, if that's what FHA stood for, it would be the FHB. The FHA is a government agency which insures mortgage loans. If we go all the way back in history, they were created in 1934 under President Roosevelt. But nonetheless, FHA is a government agency. They have a set of guidelines that you have to meet in order to get qualified to purchase a home and get a loan, okay? So lenders such as my company, Liberty Home Mortgage, we are an FHA lender and we qualify people for FHA loans. So how do they work, okay? They have guidelines. I'm gonna give you some of the guidelines. You wanna pay attention to some of these, okay? FHA loans go down as low as a 500 credit score. For example, you could possibly get an FHA loan as long as you have a 500 score. Now, not so fast on that one. Don't just think, just because I have that score, I get the loan. But from 500 to 579, the minimum down payment for FHA is 10% of the purchase price. From 580 up, the minimum down payment for FHA is 3.5%. Now, a lot of people get so fixated on that number, they'll say, Hesh, I've got a 550 or I've got a 590. I don't know what the big deal is. How can't I get a loan? Simple. It's not just the credit score. As with all loans, everything in total gets factored into the equation of whether or not you should get a loan. I'll give you an example. If you're sitting on a 550 credit score, you probably have some late payments on some small bills. I've got news for you. Just because you have a 550 score and you've got 10% down doesn't guarantee you're getting the loan, especially if you're going late on a $10 credit card, okay? So just because you have the score doesn't mean you get the loan. But for FHA, that is the first step. That's the score is one aspect of it. You do not have to be a first-time home buyer. Why do a lot of first-time home buyers end up going with an FHA loan? Simple. FHA is probably the most flexible type of loan when it comes to credit score, credit history, debt ratio, affordability, explanations of job changes, job gaps, job time, a lot of things like that. Probably one of the most flexible when you look at the total picture of it. For bankruptcies, you have to be 2 years from the discharge of a Chapter 7 bankruptcy to go FHA. You have to be 3 years from the satisfaction of a foreclosure. Now, if you say, Hesh, I got divorced and the house was given to my ex through the divorce decree by court order, and then they went into foreclosure, I still have to wait 3 years? You do not. So there's exceptions to that rule. Collections do not have to be paid off. If you have collections, I should say this, 99% of the time, collections don't have to be paid off for FHA, okay? Sometimes they do. If you're disputing the collection, it's over a certain dollar figure, the aggregate amount's over a certain dollar figure. So you gotta watch the collections, but collections for the most part do not have to be paid off. You could use child support to qualify. Child support will be counted against you for qualifying. That's a liability. We will hold it against you. As far as job history and job time goes, we would like you to be on the job for 2 years. I always tell people this. When it comes to job history, we'd like you on the job for 2 years. Same job, same location, 2 consecutive years. If not 2 years, same job, same location, you want to have 2 years in the same line of work with no breaks. If it's not 2 years in the same line of work with no breaks, step 3 is what I call it, or level 3 is I say, what's the story? If you say to me, Hesh, I just graduated nursing school in December, and starting in May, I'm going to start working at the Mayo Clinic at the local hospital as a nurse. Great. We will use your time in school as your employment history. I'll get a copy of your transcripts, your diploma. We'll use that as your employment history, and you're just starting your new job and you're 1 day on the job. Actually, I can close before you start the job. How's that one for you? You don't have to be 2 years on the same job, same location, but that's the general starting point. Pensions are eligible to use as income to qualify for an FHA loan. Social Security is. I've had people say, Hesh, I'm too old to get an FHA loan. It's a first-time home buyer loan, and this is my 5th house. First of all, it's not a first-time home buyer loan, even though a lot of first-time home buyers oftentimes go with it. There's no age restrictions. You could be 90 years old. You could be 100 years old, okay? There's no age restrictions on getting an FHA loan. The least amount down, as I said previously, is 3.5% of the purchase price. FHA does have loans called renovation loans, where we will give, not you, we'll give a home improvement company the money to make the repairs on the house. We could hold some money back for repairing. It's called an escrow repair holdback. A lot of that not that it exists anymore, but this shows my age a little bit, is more weather related. If some of the repairs cannot be made because of the weather, we can cut you a little bit of a break and hold that back. As far as your credit goes, again, pay attention to what's on your credit history, your credit scores, job time, your job history, your debt ratio. For debt to income ratio, FHA is probably one of the most flexible loans on allowing you to stretch your income over a large portion of debt. That's a high debt to income ratio. I'm not saying that's a good thing, but FHA is pretty flexible when it comes to debt ratio. You could get your parents to co-sign, get a family member, your grandparents, your aunts and uncles. A lot of first-time home buyers, they're missing the job time, the credit, or something like that. So a lot of times they will get their parents to co-sign. That is called a non-occupying co-borrower. Here's one for you. You can buy a 2-family, a 3-family, or a 4-family going FHA, and the down payment is still only 3.5% of the purchase price. So imagine that. Imagine buying a 2-family and only having to come up with 3.5% to buy it. There are down payment assistance programs for you also. So we can do an FHA loan where the 3.5% down does not come from you. It comes from the lender, a state or government agency, something like that. Those are called down payment assistance programs, and they do exist for FHA loans. You could have a loan where it's you and your spouse on the loan. It's you and 2 others on the loan. It's you and 3 others on the loan. You can go through this 1,000 different ways. At the end of the day, there's a lot of flexibility in there. FHAs are great loans to get for a lot of people. They're not the only loan, of course, but it is a great loan. So if you're looking to get qualified for a loan, it's almost like a tongue twister for me. Give me a call. I'm licensed in 45 states, and do I do FHA? Of course. I also do VA, USDA, and conventional loans. I work from perfect credit with big down payments because my rates and fees are super competitive. And of course, I work with people with less than perfect credit. And I will tell you, when it comes to knowing guidelines and returning calls, nobody touches me in the country, or at least the 45 states I do business in. Like, subscribe, and share these videos on your page. Comment, put some questions in there, and call me if you need help. I'll be seeing you on the next video.